Hey everyone, Langestrom here. So I am getting requests basically to go over how I trade, sort of the routine I do, what am I looking for, how do I have the confidence to enter this trade and whatnot. And of course, as your friendly neighborhood pro analyst, I'd love to help. But I guess before we begin, I do want to preface that you shouldn't feel pressured to essentially copy every single setting or try to mimic every single thing that I do. And the reason is we are all different people. We have different styles, different tastes, right? I modified my chart down to the aesthetic of my charts based on what I'm comfortable with and how I read my charts. So I'm not going to go over every single setting of my indicators, maybe just the important ones like your ChartPrime Oscillator Pro Plus and your MVP ribbon. But essentially, my goal here is to get you the right fundamentals and possibly the right mindset going into modifying your toolkit to better suit you. So before we sort of begin with anything technicals related with our wonderful ChartPrime indicators and suite, I do something very odd. Well, it's not really odd, but I really like it as sort of a rule of thumb. So I'm going to share a screen right here. And essentially, what I do is I look at fundamental analysis. So, of course, we have the best technical analysis in the world, care of ChartPrime, but it's also important to get essentially some fundamental analysis when you're deciding whether to take a trade or not and what's your bias for the day. So I always start with the fear and greed index. It tells us the market sentiment, and I prefer CoinGlass over sort of the other ones because of they do give different calculations, right? They base it off several other factors, and I feel CoinGlass is more holistic, more complete, more accurate. But obviously, choose whichever you want, right? So right now it's at 23, which is in fear, and that was quite a drop because we were at 24, I believe, just a few days ago. So quite a drop. It's just a 1 point drop, but that matters because essentially the best times to buy is when we're in extreme fear. Fear is good for DCAing. Extreme fear is good for maybe aping into a trade or a long rather. So when we reach extreme greed, that kind of tells you that maybe it's a good time to ape into a short. Greed, and if you're short, maybe it's a good time to DCA. Neutral is just wait and see what the market does. Do not do anything, just wait and see. Now, another thing I like looking at is the cryptocurrency liquidation map. So when you type this in Google, it could show up as like liquidation levels. So I do liquidation map. And essentially, you want to go to the second one because this is specifically Binance, right? You want to refresh and make sure it's accurate. And at the time of recording, which is November 7, 9:43 p.m. GMT plus 8, we see that there are a ton more shorts. We have a big cluster of long liquidations at around 98,000, some longs, and quite a few days ago, or maybe even yesterday, right? There were more longs than there were shorts, and now they're getting decimated. You look at the 7 day for swings. So 1 day for scalping, 7 day for swings. We see the same thing. Lots of liquidations here on the longs. You just go down here, you got them, right? But again, there are a ton more shorts. Let's do 30 day. 30 day is great for position holds or spot buys. And you can see, same thing. So generally, what I'm seeing here, right, is we've got an increase in short leverage, right? More people are shorting the market with leverage. But it's important to note that there are people who are putting in longs with massive leverage, thinking that that is the bottom. When in reality, stuff like the 1 week will show you that we there's still going to be more downside. And so taking longs that aren't scalps or maybe even swings, that seems rather irrational for me. But to each their own. And I'm sure there are plenty of people who made money from doing those very tiny longs. Next, I look at the RSI heat map. Now, of course, we have ChartPrime CPO Plus, which is it's way superior compared to the RSI. It's more accurate, right? But I like looking at the RSI heat map because it's a general overview of what the market's at. And so you can see stuff like ZEC, NEAR, Hippo. You can see outliers and you can look at these coins. These become coins of interest for your trading. Essentially, you can look at them and see like, okay, let me see the chart. And let's see if we can find confluences using our ChartPrime suite to basically see whether or not we can act on it, whether they're actionable. And with that, we're basically and it refreshes, right? So 4 hours is great for scalping. Lower time frames are great for scalping. I wouldn't go anywhere any lower than 1 hour. And obviously, the longer you go, the more applicable it is to like swinging or position trading. So 1 week is great for position trading. You can see that stuff are getting oversold on the 1 week, and that's great because we have a long and around 93, 92,000, 24 hours, same thing, and whatnot. And of course, you can always refresh it if needed. So yeah, and that's basically it for fundamental analysis. These are all public. You can all look at them. And I think it's a great rule of thumb to just do this when you can. So with that, let's boot up TradingView, right? So here I've got TradingView. So I've opened basically an empty chart just so we can start just doing our thing. So typically, I remove the volume ticks because if you have your ChartPrime Oscillator Pro Plus, you already have your volume matrix, so it's not really needed. And I have them saved as basically templates. Now, what I do specifically, right, is I make sure that I always have a dual screen. And if you go to my lives, I always analyze based on dual two time frames, right? I never look at just one time frame. I look at a lower time frame in context to a higher time frame. The higher time frame basically gives you your bias, and the lower time frame gives you your entry. Okay. Now, what we're going to do is also make sure that we got the same symbol on both of them. Okay. So crosshair as well. So this is what I do. Obviously, you can have more, but I find that anything more is probably unnecessary, and that it's based on your size of your monitor, anyways. So next, I'm going to boot up. Let's boot up a swing sort of setup. So for me, that's either 15 or 30 minutes, and then 4 hours. So let's do 30 minutes and 4 hours, right? Now, I'm not going into specifics of the settings of my indicators, right? Because I want you guys to basically do your own due diligence and experiment. But essentially, when you go through these, right, you can select the color, right? Right now, I believe the standard is set to blue and red. I prefer red and green. That's basically how I trade. That's how I understand the market. Your divergences are also different, right? And maybe this is cheating because you can see my settings and copy. But essentially, I want you guys to be able to make your own decisions, customize it the way you like, and really just own your indicators because you're paying for the subscription. And so make it yours, right? You don't have to copy me. You don't have to copy anyone. You can take notes, right? Maybe adopt some, but make sure that when you do this, it's not because, oh, Langstrom has his settings this way. Oh, Runair has his settings this way. Oh, OC guy has his settings this way. Of course, it's flattering, and thank you for trusting in our setup, but I want you guys to be your own trader because I want you guys to be able to develop your own skills. I don't want you guys to just rely on me because in that case, well, you should have just been a bot. And uh, I believe that you guys are capable and able to become very competent traders and able to make decisions based on confluences, logic, rationale, mathematics, whatever sort of acceptable logic, right? I believe in you guys. And so I'd want that for you. So, anyways, that's basically it. And I also have the MA ribbon, which to add, let's just delete this real quick so we can actually add it, right? Let's just add indicator strategy, just type in moving average ribbon. Obviously, there are going to be limitations based on your subscription to TradingView. So make sure that you also check how many indicators you can place. So you just add that. We go to settings. We remove this. This is one of the only ones I am willing to basically teach you guys because it's really cool. Again, shout out to Digital LRS for showing this to me. We change this to 144. I do SMA. We go all the way down, second to the last. Remove this style. Make this a little thicker so it's easier. Remove these two, and bada bing, bada boom, we have it. So essentially, there are essentially three things I look for. Um, and I'll break this down into uh okay, so the first step is determining are we bullish or are we bearish, right? And that's important because if you don't know whether you're bullish or bearish, you shouldn't be taking a trade at all, right? So right now, what I'm going to do to determine is base it off these reactors. So this is the dynamic reactor, this is the quantum reactor. It's all in market Oracle Pro Plus and inputs right here. So essentially, I treat these as your short and long moving average, right? Some people have their long moving averages set to, let's say, 200. Some will have it set to 100. I think rule of thumb is 200, but I just use the quantum reactor. And then your dynamic reactor is basically either your 21 or 50 moving average. So right now, as we're looking at, let's say, SWE on 30 minutes, 4 hours, right? I'm going to look at the higher time frame first because that basically gives me a bias. So I see that the quantum reactor is above the dynamic reactor. So clearly we are really bearish on SUI, right? So there, we're bearish. But then what does price action say right now? Right now, on the 4 hour, we're seeing a peak bottom right here indicated by this peak seeker, which I've made into a diamond. Again, it's customization. Typically, or by default, this is a circle. For me, it's a diamond. You can change it into a diamond if you'd like. So I'm seeing that we got a peak seeker. We were oversold in this area right here, and we even got a bullish divergence. So you might think that, hey, maybe we can long that. However, another thing I look for, right, is your MVP ribbon. I want to know this is bullish, but the magnitude or the size of that ribbon isn't quite strong. I'm not confident that we can break above this dynamic zero line or this fluid zero line that we've created, right? So would I go long solely based on the 4 hour right now? No, because I see that in terms of direction, we are bearish. In terms of, we do have some bullish signs, right? We have a bullish divergence mixed with a peak bottom, green ribbon, right? And some bullish trend strength, as well as bullish momentum. But because we haven't broken above your fluid zero line, for me, that is a non-negotiable. It's not a non-negotiable, but it's a big point of confluence that maybe taking along based on the 4 hour isn't a great idea. Okay, let's look at your 30 minutes then, because if our 4 hour is not good, maybe our 30 minutes can give us a little more insight. And we see that while we are at the lower extremity, notice we're not overbought or oversold rather. We're not oversold. We're transitioning back to the upside. So I think, okay, let's long that. But then, and we also got bottoming bars, but note that we're not even at all the way down to the lower extremity on these bottoming bars. And take a look at the magnitude of that momentum. It is large relative to the one in the 4 hour, right? And so essentially, I'm getting no trade right here. I'm getting mixed signals. Some signal says bullish, some says bearish. No trade. I'm not getting a good signal here. You want some level of confirmation both on your higher time frame and lower time frame. So let's change the asset class, right? Let's change it to BTC, right? Maybe we can get a little bit more confluence, right? And for the sake of it, why not let's go 12 hour 1 week. And I can basically run you through my FVG strategy. All right. So FVGs are nice. Obviously, it's up to you whether you want to include that in your strategy or not. But as you can see right here, right, what I'm seeing on the 1 week is bearish. We've got heavy money outflow, bearish volume, bearish divergence, bearish momentum. So everything says bearish. So why am I putting a long right here on the FVG? Well, if you trust the theory of fair value gaps, that means that you're very likely to bounce off the fair value gaps. But also, if you look at essentially the magnitude of how far this can go down before it reaches the lower extremity, it's about 1 or 2 weeks, right? Given that we're over here based on this candle, by the time this closes in 2 days and 11 hours, we'll probably be all the way down here, given it the magnitude of it. And note, when we got this peak bottom, we were over here, right? We were over there. So this area right here is a very important area relative to everything. And we got our ribbon twist around this area. So I see this as a nice retest of this little zone that we created or this area in price action. And that's why I said, let's put along in the FVG. It looks like all the math is good. There's a lot of confluences that we're going to go there. And even if technically we're trying to catch a falling knife on this, there's enough mathematics, there's enough confluence. I'm confident that we can long here. And if we look on the 12-hour, right, what will we notice about that area? Well, we can see that the discount zone just constantly gets pushed down, right? In fact, our discount zone was over here earlier, right? But now we've pushed it down all the way to essentially 98,000. What we can see is we got oversold, we got our dead cat bounce. We shorted right here at around 104 to things, right? We saw that there was a ton of money outflow. It's significant. We saw that even if we did get a sort of a twist of ribbon, right? We got an oversold, up reversal, twist of the ribbon. It's still sort of pointed down. There's some weakness. We didn't even fully bottom out on your momentum, right? It can still push forward or push downward. And so for me, it was a no-brainer. Simply based on the 1 week, I already knew high probability of a long here. Based on the 12-hour, right? I can confirm that this is not a very strong showing of a push to the upside. I'm going to see a little bit more downside. And with that, that is how I called our 93, 92-ish thousand Bitcoin long. Now, can I be wrong? Is it possible that price will just go here to the FVG, right? And then suddenly violate and we go here to the dynamic reactor? Absolutely, I might be wrong. I'm not hiding the fact that I might be wrong. And even on streams, I tell you I might be wrong. But the thing is, I have confidence based on how I've traded, based on my strategy, based on my analysis, that this is what I think will happen. And given the amount of confidence and confluence that I've been able to get, I can safely say or bravely say that I think this is high probability. There's a lot of things we can see here that we can consider and that essentially will get us those gains. If we're wrong, we have to accept it. That's why we need proper risk management. And that brings me to essentially the next part of my strategy. How do we track or basically log or account for risk management? So I've also posted a trading calculator. I pinned it. And now, of course, this isn't a ChartPrime product, right? This is my personal trading log calculator that I want to share with you guys that maybe you can use and maybe you can modify. So when you guys log into this, this is going to be view only, and you basically make a copy. Everything in gray is what you add or basically input or change. So for example, your outstanding portfolio, I placed a note. So let's say your outstanding portfolio is $10,000. Why not? Right? It says that your 1% margin is going to be $100. You put your coin type, let's say it's BTC. Let's put an entry, right? Let's put an entry of our entry was, let's say 92,000. 92,000. Obviously, there's not going to be anything that appears yet, but now we know that our SL is 84,500. And the reason we set that, right? Let me stop sharing. Let's go back to trading view, right? The reason we're setting this is essentially we're putting a long position somewhere around the start. So we put it at 92,000, right? 92,000, we're setting it here. 92,000. We want to set it below the FVG, hence the 84.5, right? It's something that's not accurate, right? And we project at least a 1 to 2 risk to reward ratio. So if we follow simply the 1 to 2, then we'll go over to like 108,000. However, I do feel that we can push further because of like market cap, my thesis on liquidity, which requires some research. And so I think we can push to say 150 or 148.5 as I placed it in the chart. So let's put it at 148.5, right? So this is basically what I'm suspecting. That's a 1 to 7.5 risk to reward. So what that translates to when we do our trade log, right? We can set up the risk to reward to 2. Obviously, if you're a beginner, you might want to go lower to maybe 1 to 1.5. Ideally, not 1 to 1. You want a little bit more reward for your risk. So 1 to 1.5 bare minimum, right? And obviously, that suddenly calculates your minimum take profit. So you can see there's a recommended leverage, there's a modified entry if you're using an exchange that doesn't have direct integration with TradingView. So our minimum take profit will change based on your risk to reward. So if we put this to 3, this is going to be higher. I think it's going to be like 105, maybe. Oh no, 13, 13. Let's change it to 5, right? 129. Let's change it to 3, 115. So yeah, do with that what you will. You always want to have to write your reason. And then when you do your screenshot of a chart initial, what I personally do is I simply just copy the link. So you go to the camera icon, you click copy link, and then uh, you just go back to the trade log, and then you can just put it right there, and it's there. And you can have your verdict, right? And you have a bunch of options. So essentially, that's what I do. And hopefully, right, this was informative and it will help you with your trading. So again, while these are great pointers and you can essentially upgrade your strategy with what I'm doing, I want you guys to remember again, we're different people. We have different tastes, we have different styles. We're inimitable, unique human beings. And so I want you guys to develop your own strategy, develop your own aesthetic, and develop just that habit of fundamental analysis, making sure that there is a reason using multi-time frame analysis. Multi-time frame analysis to inform your trades. Those are fundamental things I think that every trader should have. But how they analyze the market and read it using our wonderful suite of indicators, that's on you. And that's something only you can do. Obviously, we're here to help you along the way, but I want you guys to be able to develop that. And again, don't be afraid to make mistakes. Just make calculated mistakes, right? I'm not saying start losing every trade, but if you're going to lose a trade, make sure that you've calculated how much you're willing to lose, right? And essentially, with this logbook, it helps make that discipline happen. So, with that, thank you guys so much for tuning in. Once again, I'm your friendly neighborhood pro analyst Langstrom, and always use a stop loss.